Alright, so good morning, dear traders. Winston Kutsia, aka Mr. Mayor Forex Trading. Alright, so interesting things happened last night. So since last night, we've been having some sideways movement, some consolidation in the market, just some, not a lot of action. But when a market does this, when it does a sideways movement, I just want to explain to you something about sideways movement. Or consolidation periods like this where markets is just moving sideways. They do that to build up liquidity. Now let me explain it to you in plain terms, not trader terms. It builds up money. It puts money into this market. That's why whenever you see sideways movement, consolidation, sideways movement, there's usually a big move right after the consolidation. Like there was consolidation, we had sideways movement, big move. Here we've got consolidation, so I know I need to prepare for a big move. With yesterday's CPI numbers that came out and the PPI numbers that came out of the US, it reflects negatively on the US dollar, but still it shows a steady decrease in the interest rate. It should have a steady increase or decrease on the interest rate. Now the numbers yesterday is good for the stock markets, but not so good for the US dollar per se, with numbers coming out lower than expected. So alright, so today at 8 o'clock, the reason I came up earlier is because I've got a pound USD trade that I've got in at the moment on here and on my real account. What I want to show you guys is, let me just get there quickly. We've got news. We've got at 8 a.m., which is now just around the corner. The time now is 7:45 South African time. So in 15 minutes time, we're going to have the CPI year on year plus the core CPI year on year for the pound. Okay, so I just wanted to show you guys that we've got these numbers coming out now. So expected or forecasted is a 2.3. The previous was a 2%. So they expect an increase on the CPI numbers, not a decrease. So I'll have a look at this. If we get more positive numbers, then we should see the pound, my pound trade, breaking through this resistance over here. This is quite a big resistance. It's been a resistance for quite some time, so that's the reason why I call this quite a nice big resistance over here. Yes, price did break through here, but it came right back down again. So we need to have a look at this and see what will happen here. I'm just going to take my, I've got 106 there. I'm just going to move it up. Actually, I'm just going to, drag it up all the way to there. Okay, because I'm having a trailing stop. So I'm already in profit with this pound USD trade. I'm already in profit here. I took my stop loss and moved it up. How I determine where the previous swing low is, because this is an uptrend, so I'm looking for swing lows, is once price breaks the previous high, then and only then is that considered a recent swing low. Then and only then do I move my stop loss up and I do a trailing stop. I want to show you something with the gold, what happened last night. So there's a little bit of, that's the recent low. You can actually say that, or that over there is a recent low. Reason that's a recent low is because price broke through that high. It came up to there, formed a new low, but this is not considered the recent swing low because the next leg didn't break that high. So yes, I could have moved my stop loss to below there, expecting price to go up, but I did not, because this is not a confirmed low. This is not a confirmed swing low, because that leg over there, that price action did not break higher than the previous high. So this is not considered the swing low yet. And I'm glad I didn't put it there. There's two main reasons why I never put my stop loss below a so-called good support. This looks like a solid support because it didn't break through there, didn't break through there, didn't break through there, didn't break through. So you would definitely, normal traders would definitely, in all aspects, put their stop losses right over here, right underneath here, right here. Now, in the previous videos, you would know that I've explained this. Try to avoid putting your stop losses where all the traders will put their stop losses. Try and avoid putting your stop losses there where everyone will put their stop losses, because the institutional traders, the big boys, the people moving the market, they are looking for these opportunities because now they need money. They need money in this trade. They need money to make money. Remember, they need money in this market to make money. If there's no one buying or selling gold, then there's no money. You can't push price up. If there's no money, then there is no money. So what do these institutional traders do? They form these nice little consolidation periods, and they look for opportunities where they can stake, where they can really take your money. So I know that there is a lot of traders who put their stop losses right below there because they think this is a nice, because they've got number one, which is the wrong way to do it, is have tight stop losses. They put it right up against there thinking that the market's going to push higher. And look what happens. Just pushes down. You can see this little candle over there. It just pushed down, picked up everyone that had their stop losses tight, picked up all that money. Now there's money in the market. So traders who've got tight stop losses and probably 10 to 1 trading 10 or 20 or 30% of their accounts. It's not traders, it's gamblers. All the gamblers are there. So now all the gamblers, majority of them who had tight stop losses, are now taken out. For what? For what? Just zip, just to put money in the market. You have to remember, when you put a stop loss, don't put big lot sizes. Minimize your lot sizes. Trade with a risk of only at the maximum 1%. Only risk maximum 1% of your account. Do not go and risk 10%, 5%, 20% of your account, because then you don't have room to place your stop loss far away from where these guys are, far away, out of reach of the institutional traders. Keep it out of their hands. You don't want to put your stop loss right below where everyone is going to put their stop losses. You have to remember, most of these big institutional traders, they haven't got stop losses. They don't work with stop losses. So please don't give them your money. Don't do that. Don't put, whenever you put a stop loss, check and see and think to yourself, do you think a lot of people, is this an obvious place to put a stop loss? If you think it's an obvious place to put a stop loss, move. Because if you think it's an obvious place, the institutional traders, the big boys, are also going to think it is an obvious, or they're not going to think, they're going to know that's an obvious place. They know that's where they can reach in and get money to put into the market. So please avoid that. That's why I was thinking about moving my stop loss up to here, but because my rules state only when the recent high is broken, this high over there is broken, then only I consider this as the recent swing low. So if this goes through now and breaks that previous high there, that high there, not this high, not that high, that high, the highest high there is, once this price breaks that high, the previous high, then only I will consider this as a swing low, and I will take my stop loss, or it's now a trailing stop, and I will move it there. I hope you guys understand that, and please, if you find value in the way I do my trading, please like, share, subscribe, comment down below. If there's something you want me to have a look at, put it in the comment section, because I will definitely, when I go live every morning, I will first have a look at all those things, and then I will continue on my trading, and I will give you my opinion on whatever you guys are asking me to have a look at. All right, but please, this is a very dangerous zone. Don't fall victim. I see so many people blow their accounts or lose money or get angry because, number one, they've got 20% of the account in this trade, which is stupid by itself already. So they can't move their stop losses. They want to have tight stop losses, very, very tight. And when if you do that, you are going to lose money. You're giving your money to the institutional traders. You are literally giving your money away. And that, dear traders, is not the way to go. You have to think, when you are trading, when you are a true trader, not a gambler, you have to take everything in consideration and think logically about it. Trading is logical thinking. That's basically all it is. You just have to think logically. And don't put yourself under pressure where you have to put a tight stop, because otherwise you are going to blow your account. Work with smaller lots. Like I say in every video, trading is systematic wealth. Little bit by little bit by little bit by little bit. That is how you make money. Then you're a trader. But if you want to make money overnight, you are a gambler. Go to a casino, you will have better luck at a casino. There's a huge difference between trading and gambling. Alright, enough of my rant. Let's have a look. In about 5 minutes time, we're going to have the numbers come out for the pound. It's already at this level over here. I can see there's a lot of volume in the market. That looks good for me. That's nice volume. Yes, I've got a vertical volume indicator here that refreshes every minute. Every minute it refreshes, so I get the up-to-date volume that's in the, you can see there it refreshed. I can get up-to-date volume in the market to see where there's volume and where there's not volume. Let me see if I can make a good example as well. Just think, this laptop is very slow. The internet here by us is slow. South African internet, whoop whoop, nice. If you get 10 megabytes per second, you are a lucky guy. Alright, so as you look at this volume count over here, you can see there's a spike in volume, and then there's a spike in volume over there. So you've got two things happening. You see there where this initial push comes from. You see there, this is the reason why there's volume there, is because people are jumping in. They don't want price to go lower than that. So that's why there's a spike in volume there. It's people jumping in or buying or selling. Well, prices are going up, so majority buyers are there. And now you can see it changed a little bit. So majority of the volume is now here. There's a lot of volume in the market. No, not a lot. This is not big volume. It's not a lot of traders in at the moment because it's nighttime. Okay, well, it got there, so I can delete that. Didn't hopefully get there. It did get there. So the Euro USD, I'm not too sure what is happening here yet, as it has not filled this gap yet. It has to fill one of the trading styles that I do use. Let me just get rid of this indicator. One of the trading styles that I use is looking for abnormal candles, long candles like this. And then I usually put either from the candle, top of the candle to the bottom of that candle, and I look for the 50% retracement, and I put a buy order in there, or pre-order, or I take that whole move as a whole, from the tippity tip of that wick to the tippity tip of that wick over there. And I take that as a move. So I would usually put my see if I did that, it would have picked me up there and I would have been in this trade. But I was expecting a deeper retracement. That's why I put my pre-order at the 25. I was expecting a little bit of a deeper retracement because there is a nice support over here and a nice volume there. You can see what I'm talking about when I'm talking about volume. You can look and see there's sideways movement. And what do we know about sideways movement? Sideways movement is where there's a lot of volume put in, a lot of money put in the market. Now here is a whole list. This is one big sideways movement area. You can see there, market is moving sideways, then it moved. Market is moving up and down, moved sideways, and then it moved. So that's why I had the idea of it might be retracing back to the 25. But if I had my pre-order in the 50, I would have been in profit. That's usually my take one. This is the third method that I use, that I will explain a bit later on. This is the third method that I use when I'm trading. Is this method when I see abnormally long candles, and I put that, and I put my pre-order at the 50% mark. If I did put it there, I would have been picked up in the market there. I would have been picked up, and I would have been in the market. That is usually my take profit 1, and then my take profit 2. My TP1 is there, and then my TP2 is there. Once I hit TP1, I move my stop loss up to just below the TP1 or below the previous low, which is there. So I would have been in profit with the TP2 as well. I would have been in profit there. And then I wait for price to break through. But unfortunately, my expectation, because this was such a violent move, was that we're going to see a bit of a deeper retracement back into this zone where the sideways movement is. But unfortunately, that did not happen. So I will have a look at this market again a bit later on. But let's see. We've got the numbers coming out right about now. So let's see. At 8 a.m. this is just a pound in 31 seconds. Let's see what the numbers are. I'm hoping for numbers better than expected. Then I should see a push on the pound. But let's see what the numbers are. All of them are pending. Let's see what the numbers are. Ooh, a little bit less than expected. See the year on here, the core CPI less than expected. Yeah, we will see everything less than expected. Maybe not the month on month, but let's see. Okay. There we've got a positive there. Okay, that's still the same output. Alright, so let's have a look at this quickly. I just want to have a look. The number over here. Change in the price of goods and services purchased by consumers for the purpose of consumption. Actual greater than forecasted is good for the currency. So if you get an actual that's better than forecasted, is good for the current currency, which means it will make the currency stronger. So any pairs you pair it up against it, you should see a push to the upside. It's released monthly. The RPI differs from CPI in that it only measures goods and services bought for the purpose of consumption by the vast majority of households, and it includes housing costs, which are excluded from CPI. Retail Price Index, that's what the RPI is. All right. And CPI is the Consumer Price Index. Alright, so now we know what it is. Let's have a look. So it states if actual is greater than forecasted, it's good for the currency. So what do you see here? The actual, that is the forecasted. The actual is 3.6, forecasted is 3.4. So it's 0.2% better than forecasted, which is good for the currency. But the CPI, the Consumer Price Index, this is a retail price index, that's the Consumer Price Index, is less than expected. Not by much, by 0.1%. So it's not that bad, So let's see what happened to the markets there quickly. I just want to have a look at that one. Add my pound USD. Bit of a downfall right over there. Little bit of a downfall. So the CPI numbers, or the, let me just quickly have a look there. I just want to see something. So with the CPI coming out lower than expected, that would have a negative effect on the pound. That would have a negative effect on the pound. Positive effect on the stock market, of course, but negative on the pound. So we should see, but with this, the retail price index, this should go up to a 50-50 over here actually, but we'll have to have a look. If we have, let me just have a good one, let me see. Alright, so, well, this is a 50-50 market then over here actually, but I'll have a look at it, because that will have a negative effect on the pound itself, on the strength of the pound. That will have a positive effect. So it's a push and pull over here. The next one coming up is, of course, the big one is the core CPI numbers. Okay, so like we know, CPI. All right, it's the core CPI, and the CPI year on year, month on month, and year on year. So let's have a look at what happens at 2:30 as well. I will go live before these numbers come out, and we will see what happens to the market trading this news, of course, but that will be at 2:30. Let me just quickly go back into the charts. Let me have a look. So we might see a bounce back on this level over here, where I do see a bit of a resistance or support coming up over there. And remember, that was also the previous high. That was considered the previous high because it broke the previous low. So that was the previous high over there, and it broke through, looking for a retest, and let's see where this market goes. Expecting it to go up, but higher, but also considering at 2:30 we got the CPI for the US coming out. We've got these numbers coming out, the core CPI coming out at 2:30. So then we'll also see what happens to this market as well. Remember to comment down below for those of you who want me to have a look at anything, and please share this video or comment or subscribe to this channel. It's a fairly new channel. I'm trying to grow this. I don't have any fancy websites or whatever, you know, no courses to buy, no nothing. I'm just trading, and I'm trading my style. If you find value in it, this is how it's going to be. I'm not going to sell you anything or ask you anything. All I ask is just share and subscribe. That's all I'm asking, and comment down below. That's all I'm asking. I will never sell anything or sell courses or whatever. I believe trading is for everyone, so the knowledge that I've built over years, I would gladly show you and teach you as I'm doing my live tradings every morning. That's just the way I operate. I don't believe you should sell your knowledge when it comes to trading, because trading is for everyone, and it is systematic wealth, and it can help a lot of people, because you don't need an education, you don't need a college degree, you don't need a bachelor's or a master's or anything to trade. You know, anyone can trade. If you have a good mentor and a good understanding, you will be successful in trading. All right, let's have a look. I just want to quickly jump into I think I want to have a little bit of a look at some stocks as well. I want to look at the NAS. I just want to have a look at the stock market while we're busy here. The US 30. I want to have a look at the US 30 quickly. Alright. Okay, so as you can see, the US 30 is in a hey man. That's not the right one. US 30. Yeah, it is. Dow Jones. There we go. Alright, so let's have a look at this one quickly. I just want to have a look. You see, this will have a positive effect on the stock market. We are on the 4-hour time frame. I might be looking and jumping into the Dow Jones as well. Reason being, I just want to put that down there. I'll make it red. I might be jumping into the stock market because according to my trading style and the way I trade, this is a point of interest where I would definitely jump in and consider the change of direction, because if you look at it, where is the previous swing high? That is the previous swing high right over there, the very tippity top. That is the previous swing high, because you see there's the low, it broke through that low down there. This didn't break it, that didn't break it, that didn't break the low, so that is not the previous swing low over there, swing high. So only now, this is the first move that broke through the previous swing high, which is right over there. So if I do see price popping up to the upside, going a retest and doing a second run, that's what I'm looking for. I'm looking for a second run. Then only I will jump into this market. I need to just go down a bit further to the minutes. I want to go down to the 30-minute time frame. Thank you. I just want to see something here. I like to trade on the 30-minute time frame when it comes to stocks, because you can see things better. So as you can see, not a swing, not a low, not a low. That is the latest swing high over there, because that thing didn't get broken. See, that low still hasn't gotten broken with any of these moves over here. Let's see that break of structure there, break of structure there. Nope, this is just sideways movement. That is the recent swing high. Alright, so as price is now broken through this area here, I will definitely want to have a stab at it. It broke through. Okay, let's go back to the nice. So once I see a breakthrough over there, I would probably take a gander at buying the stock market, and then maybe following it up to the very tippity top over there. But I'll do a trailing stop right over there. So let's see, stock market, good. That's that. Okay. That's that. US 100. I just want to look at the US 100 as well. 100. Okay, so the same with the US 100. I like to trade either the Dow Jones or the US 100. Yes, exactly the same. Where's that previous swing high? There's the previous swing high over there. Came down. Okay, so actually the previous swing high on this one is a bit on the higher side, right over there. Alright, so let's have a look. See, I just want to come all the way back. As you can see, it's a nice rise, nice climb on the stock market. Okay, so let's have a look. See, so this one I will trade on the 15-minute time frame. The US 100. I just want to get it a little bit. I just want to have a good view here quickly of what is happening. This is on the 15-minute time frame. Nice. No. Let's have a look at that one over there. Didn't break it. Broke that. There it is. Okay, so we're on the up. I'm looking for highs. There's the high, there's the swing low. There's a high there, so that is confirmed the swing low. There's a high there, so that's considered the swing low over there. Swing low. Okay, swing low over there. Broke through, broke that high over there, so that is considered the swing low. Didn't break, broke it there, so that's considered the swing low. Right over there, I just want to draw a quick, just a quick line over here. Make it nice and straight. Alright, fantastic. So then that is considered also sharp. Okay, that's the swing low over there. If it breaks a bit lower, I'll wait for a retest and then a second run. So that's for the US30. I will give my thoughts on it also a bit later on. I'm just going to do some reading on it, some proper reading on it, and then I'll definitely give you my opinion and see where the stock market will be going from here on. Just want to see quickly. I'm just going to mark out all these areas of interest over here quickly. That would be it right over there. That was just a quick pop to the downside test. And then cool stuff, cool bananas. I just want to put another one over there. Alright, that was also a quick test over there. Cool. Okay, so from what I can see on the daily, on this market, I just want to mark it out quickly and just quickly see. Okay, so from what I can see on the daily is we had a little bit of an up movement and then all the way down. But with the recent numbers coming out from the US from yesterday, we do see that we got a little bit of a push to the upside, but I'm still not fully bullish on the US30 or the Dow Jones. I'm still not bullish on it, as we have to wait for the new numbers to come out now as well. So we'll have a look and see, and we'll just check what's happening with it. I'm in 2 months because there's a lot of movement in the market. That's a nice push to the upside. So I do know that buyers have jumped in there. But how strong is that hold going to be? I need to see a pushback. I need to see a nice pushback. And then I'll probably have a look at jumping into this market over here. I just want to look at the dollar index, the DXY. This is just a normal dollar index, just to see the currency or how strong or what's happening in the dollar. When I get it down to the 4 hours. Okay, so as you can see with the dollar, we've just got a down momentum. This is not good for the dollar at all, which is in a downward free fall, downward spiral here the whole time. Alright, so let's just do a couple of markouts over here as well. I just want to put that one down as a point of interest. But you see with the with this market as well, I just want to have a look at something quickly. With this move right over here, from there to there, I just want to have a look. So we will see some sideways movement within that. I just want to take this away because it's confusing me there, and that one away. Delete that one somewhere. Right, so as we see back on the 50%, we do see a nice 50% retracement and then a pull down to the downside, which tells me that the dollar index, the dollar is still a bit on the downside. It's still pushing further down, which doesn't give me a lot of confidence in buying dollar at the moment. I'll rather be selling off on the dollar. So, which means with all the markets that you are in, If you're looking at the Euro USD, push to the upside. If you're looking at gold, should be a push to the upside. If you're looking at US yen, should be a push to the downside. You see, so it's all, yeah, it's all just Euro yen, exactly the same. Yeah. We have to see what happens. We did get the initial push to the upside. But we'll have to see what happens, or what the numbers are today at 2:30. I just want to get there quickly again. So we'll have to look at the numbers, what the numbers are at 2:30. The core CPI. We'll have to look at these numbers, then we'll probably get a nice direction on the US dollar. I think I'm just going to wait for these numbers to come out, and then I can make a decision upon a bearish or bullish decision. Okay, yeah, that's what we're waiting for. But from my side, please have a good day. I'm not going to take up all your time today. I'm not going to be too long. I'm just going to have these trades open and then wait for the numbers, the CPI, the core CPI from the US to come out today, and we'll make a plan. We'll work from there on. From my side, please have a good one, and I will see you guys again at 2:30. Remember, ladies and gents, if you have anything that you want me to have a look at, please comment it down below, and please, like I said, share, subscribe, and comment, and we will have some fun. From my side, have a good one.